Friends, founders, and future titans of industry, look around you. You are here today not because you're looking for a job, but because you are brave enough to build one. You are not here to follow rules. You are here to write them. You have the idea, the passion, and the drive. You are already an entrepreneur. But now, we stand at a critical crossroads. The moment where the invisible dream must take on a visible form. You've handled the vision, the product, and the market. Now we must talk about the architecture. Choosing your business structure. I know what some of you are thinking. Structure? That sounds like paperwork, legal forms, and boring bureaucracy. And you're half right. It involves forms. But let me tell you this. Choosing your business structure is not a bureaucratic burden. It is the first strategic act of future-proofing your dream. It is the blueprint that dictates your risk, your growth, your tax efficiency, and your ability to attract massive investment. This choice is a declaration of intent. It answers the fundamental question: how big do I intend to play? Let's unpack the options. But keep your eyes focused on your vision, not the jargon. Stage 1. The solo pioneer and the collaborative pact. When you first started, perhaps you were a sole proprietorship. This is the simplest structure, the entrepreneurial equivalent of throwing a jacket over your shoulder and walking out the door. It's fast, it's easy, and taxes flow directly through your personal return. This is pure freedom. But freedom comes with a price. Unlimited personal liability. You are the business, and the business is you. If the business is sued, your house, your savings, and your personal assets are on the line. It's perfect for testing the waters, but dangerous if you plan to swim in the deep end. Then there is the partnership. 2 or more brave souls uniting their assets, skills, and energy. A partnership can multiply your power exponentially. But remember the law of contracts. You are liable for your partner's actions, and they are liable for yours. A partnership is like a marriage without the honeymoon. It requires trust, transparency, and a bulletproof operating agreement. If you choose a partner, choose your structure wisely. General partnerships carry high liability. A limited partnership, LP, or limited liability partnership, LLP, offers some protective layers. In both these stages, you are trading protection for simplicity. That's a valid trade, but you must know the cost. Stage 2. The mighty shield of the LLC. For most serious founders today, the limited liability company, LLC, is the sweet spot. The magnificent balance. The LLC is a shield. It is the fortress wall you build between your business's financial problems and your family's financial security. The power of the LLC lies in its namesake: limited liability. Once the LLC is properly formed, the business is legally separate from you. You might lose the business, but you are protected from losing your personal assets due to business debts or lawsuits. And the best part? It retains the tax simplicity of a sole proprietorship or a partnership. It is usually treated as a pass-through entity, meaning the profits or losses are simply reported on your personal tax return. Protection and flexibility. This is the foundation that allows you to focus on growth without paralyzing fear. Stage 3. The architecture of infinite scale, the corporation. But what if your dream is colossal? What if you plan to conquer markets, launch multiple rounds of venture capital, and eventually offer stock to the public? then you must choose the structure of the giants, the corporation. A corporation is the most complex structure, but it is built for one thing: maximum scale. The C Corporation, C Corp. This is the structure for Silicon Valley. It's the required structure if you want to accept large external investments from VCs, issue different classes of stock, or go public. Yes, it has the infamous double taxation. The business pays taxes on profits, and then shareholders pay taxes on dividends. But if you're raising tens of millions of dollars, the benefits of growth far outweigh this complexity. This is the structure of Facebook, Google, and every company that aims to be a household name. The S Corporation, S Corp. This is a tax designation, not a true structure. It is essentially an LLC or C Corp that elects to be taxed like a pass-through entity, while still retaining limited liability. It's a powerful tool for certain types of profitable small businesses that want liability protection without the corporate tax hit. The call to action. Align your structure with your vision. So, here is the challenge I leave with you. Your structure must align with your ambition,